the sensitivity of Brexit, the current government's apparent commitment to leaving deal or no deal, and the thinness, remember it's one, of the government's majority, lead us to a conclusion that a general election cannot be ruled out this year as a way of breaking through all of this. If there were a general election, who would win it? Who knows? The polls are, as they say, all over the place, but you couldn't rule out, and this is not in any way being political, but you couldn't rule out a Labour victory or some Labour part in some coalition, probably, if they're going to take part, it seems, in any coalition, leading it or being a strong part of it. So given that there could be a Labour government or strong Labour influence, what would their tax policies be? Because a number of individuals are starting to worry, be concerned or seek advice on, if Labour did get into power, what would their policies be? And if so, what should I do about it? Well, we don't have yet, because we don't have any formal election date given or any election date given, we just know there's a possibility of it. But we don't have a manifesto to look at. We have the 2017 manifesto to look at, and we have a number of statements made largely by the Shadow Chancellor, John McDonnell, to consider, which gives us a strong indication of the direction of travel of Labour tax policies. Now, probably the strongest overview given was in an interview to The Guardian by John McDonnell, who was looking to implement an irreversible shift of wealth and power to working people. So if we look at the underlying trend being, unsurprisingly, strongly redistributive, then what can we look at? If we're looking at income tax, we would definitely look at higher income tax rates. We're looking at a potentially new rate of 45%. I know we've already got one, but as a kind of interim rate between 40, a new one 45, and a new higher rate, I think, for those earning above 123,000 of 50%. We could even be looking at some excess income tax being applied to, or excess pay tax being applied to companies, has been talked about, who pay directors. It's really to stop excessive director pays at levels above 300 and 500,000 pounds. So concepts around what represents high pay, for 80,000 represents, the threshold for being the highest rate of tax. All of this seems to be a really strong shift, probably understandably, towards higher income tax rates for those that earn more. Then we look at capital taxes, and you could expect to see stronger taxes on second properties, definitely, and we've seen that already. The trend is well established. Looking at land taxes, we've had the document Land for the Many, which puts forward quite radical proposals, one of them being quite stronger taxes on second property, and a real rethink on the way council tax works. So effectively applying some kind of, I wouldn't call it a mansion tax, but a much more realistic rate of tax applied to the current value of properties than the current council tax does. Staying with capital taxes, also in Land for the Many and the IPPR paper, look at a radical change to inheritance tax. Now this isn't, again I would stress, it isn't official Labour policy, but they have looked at the IPPR presentations and representations and suggestions, and definitely the Land for the Many document, on research, which was commissioned by the Labour Party and will definitely influence their thinking. You'll see a change, what they're proposing, or in that document, not Labour as such formally yet, is a complete rethink on inheritance tax to change it from a donor-based tax to a donee-based tax, and having effectively just a tax on lifetime gifts, with the transfer made on death being the final transfer, as it were, with tax rates possibly being linked to the income tax rate. So how about that? Corporation tax, some say strangely, especially if we do have Brexit, scheduled to go up with a strongly projected yield coming from those increases in rates. Rates increases have been talked about from the current 19, soon to be 17%, moving right up to 26%, with the reintroduction of a small companies rate of 21%, scheduled to generate over 9 billion, but of course it ignores the fact that once you put tax rates up higher, then people and businesses tend to either not do business in the country with the higher tax rate or find ways of avoiding the tax. That's a general principle that has been proved to apply in practice over a number of years. Then there's been quite strongly expressed fears by individuals, increasingly, over a possible the reintroduction of capital controls, exchange controls, or some form of wealth tax. John McDonnell's expressly said that we will not be said this in January this year, reintroducing or introducing any form of capital controls. So one could take some comfort from that. It was a very clear statement made. And then on wealth tax, nothing been said. It's largely been issued across Europe. There's a few exceptions, but wealth tax generally isn't applied. But you never know. Effectively, what I've just talked about in relation to a change to council tax and an increase in the taxes on property at the current value could be seen as some form of property-based wealth tax. So all of that is in the mix. Definite radical change and a very clear contrast between aspired to conservative tax policies under the current tax minister, which are largely very around the lowering of tax, and a very different tax regime proposed under the Labour Party, and we'd see a lot more hard evidence of that when we finally see a manifesto, which will probably be triggered by the announcement of an election, should there be one. There's no guarantee there will be one. There's a chance there could be one, as I mentioned earlier, though. So what should you do about that? Well, who knows? It depends on the strength of your feeling around the likelihood of these changes coming in. One thing you can absolutely say, though, is that if you have unused reliefs and allowances and exemptions and the ability to do something about them, and it's right, given your current and future aspired to financial circumstances, that you should do something about them, it's merely been getting round to it, then this might be a really good time to think about getting round to it.